European green transition. So we IPO'd the business last year, raised 6.5 million, with a plan to become an M&A-style vehicle and really start acquiring a number of assets in the broader space. So we're going to do a short presentation, then hopefully a few questions from the audience. If anyone has a question halfway through, feel free to let us know. But we want to talk to you about what we've done so far, and then ultimately what we plan to do over the near future, some of the deals in terms of M&A, and also the existing assets that we have at the moment and what we plan to do with them. So I'll move on to the next slide. Skip past the disclaimer. So the team, we're a very small team. Myself and Cathal Friel, who some of you might know. So Cathal is co-founder of the business. The business was founded in 2021. He's now executive chairman of EGT. He stepped into that role on the 30th of June. Previously, he was a non-executive director, and he's also the largest shareholder in the company. So very aligned to EGT really scaling and growing as a business. He's stepped into that executive chair role to really drive forward the M&A plans. As he has a track record of creating significant value on AIM. This EGT was his 5th IPO since 2012, and there's a number of names underneath Amaret Pharma and hVivo, whose models we're looking to replicate, and we'll talk about that in a few minutes. Myself, just as a very brief overview. So I'm an accountant by background, joined Raglan Capital and Cathal 4 years ago, and really with a focus on AIM companies, worked across hVivo, Poolbeg Pharma and a number of others, and with EGT my primary role is M&A, identifying assets and businesses that we can bring into the business and grow from there. So I just wanted to talk to you about the key pillars of the business, right? And where we are at the moment. We believe we're really well positioned to actually start executing on our M&A strategy, while also delivering significant value from our portfolio of assets that we currently have. So point one there is an M&A focus targeting distressed revenue generating businesses. So that's really what we want to become. What we're really actively looking at the moment is targeting distress. Across our team, we have a track record of really building businesses that have sizable revenue, and that we can transform and take to the next stage and deliver value for the shareholders. The second point is the M&A strategy is focused across multiple sectors. So we have a clear objective, and we've had it since IPO, and that has always been the strategy to move EGT away from being a natural resources and a mining company. So we're looking to broaden into a number of sectors, with the key focus being finding something that's revenue generating, finding something that's distressed, and scaling the business from there. EGT is very well capitalized, so we are able to do deals. We have 3.7 million cash. Our last reported figure ended December. As I mentioned, very flexible model, very low headcount, and we have no debt at the moment. So we think we're in a good position to find an attractive deal and to do it in the near term. So now on to sort of some of our own projects. We're going to talk about the Alstom rare earth project. So obviously rare earths are a very interesting space at the moment. I've talked to a number of people downstairs already about them. Prices are starting to move. The geopolitical environment is creating a lot of opportunity, and we'll talk briefly about our drill program that we executed at Alstom, showing that it's a district scale system, and that ultimately we're looking to monetize this through a sale or partnership in the near future. Our other exploration projects, specifically the Pajala copper project in northern Sweden, we're seeing a good bit of interest around that, and again we're looking to monetize that. And Europe at the moment, there's a huge demand for copper globally, but particularly in Europe, so we see this as an attractive proposition to sell and to deliver value to the shareholders. And then finally, last point is around our Alton carbon credit project. We're progressing that. We're working with a number of key stakeholders on it, and we recently extended the option. So I'll give you an overview of how we're getting on with that business. So I think at this time it's useful to really outline the types of businesses and the strategy we're looking to develop within EGT in terms of bringing in a new business. So I've mentioned it a few times. I'm going to keep mentioning it. The key is to identify something that's revenue generating. Okay, so we want something that's sizable, of scale. Ideally somewhere in the 10 million plus revenue bracket is really where we're looking at. We don't want something that's a couple of $100,000 that we can tick the revenue box. It's really finding something of scale that can be the first step in building something that's actually gets us to the next level. Then target 25 million revenue, 50 million revenue, and really grow the business over the next few years. The focus is on distress. I mentioned we have a track record of focusing on distressed businesses, turning them around, and ultimately transforming the operations, bringing in new people, and scaling the business through that. And we'll talk about some of the previous businesses we've done that in successfully. There's a rapidly evolving market, as we all know. There's a whole host of cash-strapped companies, and this creates significant opportunities for EGT across the UK and across Europe. Things like tariffs, inflation, a whole host of other factors have really impacted small businesses at the moment, and we see that as an opportunity for us, as we have a reasonably significant cash pile. We can support businesses and get in at an attractive valuation for our shareholders. Again, I mentioned we're well capitalized. We have a very flexible model, so we've no committed cost at the moment for any future projects. We spent money on our Ulcerum rare earth project last year to really prove the project up, and we'll talk about that in a minute. But other than that, we have no further costs for mining. We spent a small bit of money this year extending the licenses to really add value to our existing projects. But other than that, we have 2 FTEs. It's a very small company, capital efficient, and gives us the ability to bring something in that's a lot bigger in the near future. And then again, I'll just mention the last point again. Since IPO, we've been very clear. The plan has always been move EGT away from natural resources and mining. We want to find a more mature revenue stage business, and we'll talk about a few of the sectors that we're looking at in a minute. Sorry. So I just wanted to outline some of the key acquisition criteria here, and this is nearly a checklist we apply to all businesses that we look for. So I mentioned revenue has to be of scale. It's targeting something ideally double-digit million revenue. Distressed or in a challenging financial position, we can go in and help restructure a balance sheet, provide working capital, whatever it may be. But typically, you get into these businesses at very attractive valuations if you're targeting distressed businesses, and then right-size the business, improve it, and benefit from that. Everything we look at, there has to be a clear pathway to near-term profitability or cash flow generation. This is not your sort of typical pre-revenue play where we're saying, there's going to be profit or cash flow in 3-4 years down the line. Everything we're looking at, it's 6 months down the line, 12 months down the line, 18 months. It's in that region, and we want to be able to turn something around really quickly. Potential for strategic bolt-on acquisitions. So everything, we look at, there has to be a pipeline of further news flow, further deals, services you can bring into the business. So that's something we're looking at. And then I'll mention it again, we don't want something that has high technological risk, has high development risk, is sort of a bench top or a proof of concept model at the stage. We're looking for more mature revenue stage businesses that are in a distressed position, and we're looking to develop with. So I've listed some of the subsectors here. There's obviously, we're European green transition, so there's a focus on the wider green economy, and then a number of adjacent services or adjacent subsectors. Services-based businesses are something that we really like. Typically, for instance, services into green infrastructure assets. We won't be investing in green infrastructure assets, but there's a whole host of services, whether it's operations and maintenance, EPC, servicing parts, that really are critical to green infrastructure assets, have multi-year contracts and are typically cash flow positive, and that can be a really attractive space, and we're seeing lots of opportunities there. Broader recycling services, it's a huge addressable market. Again, a a number of businesses have found themselves in challenging positions, and we're talking to a few of them to see if we can get something done in that space. Environmental services, again, a really, really growing market, a large market, and a number of attractive opportunities there. Housing decarbonisation sort of encompasses the whole sort of heat pump solar space. There's obviously been a significant slowdown in those types of businesses across the UK, Ireland, Europe over the last number of months and years. So, there are still some good businesses in that space that we're looking at. And then there's a range of franchise-related opportunities across a host of sectors that we see significant upside in. So, I've talked a lot about a hypothetical model there, but I just want to, next slide really is talking about how we've done this before, right? So why we believe you should trust us to do it again, ultimately. So our team has a track record of first of all, acquiring, but, most importantly, transforming distressed businesses. So I'll use, it was originally Open Orphan. It's now renamed hVivo PLC as an example of that. So that was set up to roll up a number of distressed clinical research businesses across Europe. Our executive chairman, Cathal Friel, led this as chairman of Open Orphan and co-founder. In 2019, they acquired AIM-listed Venn Life Sciences for 4 million equity. So that was a clinical research services business, had operations in Germany, the Netherlands, France, Ireland, and the UK. It was in a distressed position. That was the first acquisition. And then very quickly, they acquired hVivo PLC. Which is based in London, world leader in human challenge trials. Again, another very distressed business. To give you a context of the size the combined entity was by the end of sort of 2020 on a pro forma basis, it was 21 million revenue and a significant EBITDA loss. And over the course of 3 or 4 years, we grew this business, streamlined it, cut out a lot of the costs, refocused it, and got it to a point where last year it did revenue 62.7 million and over a 25% EBITDA margin. So a significant transformation. At the start of 2025, we acquired CRS, who are a leading German phase 1 clinical trials business for 10 million cash, and that really now diversifies the business into a new sector. After that deal, Cathal, our executive chairman, stepped down from hVivo with the plan to do this all again with European green transition. So we're really excited to replicate that success. Another one on the right hand side, Amaret Pharma. So this is one that Cathal was the key driver in the early days. It was originally an oil and gas business, converted to a pharmaceutical business, IPO'd in London and Dublin in 2016 at a 50 million valuation. Followed the model that we're looking to implement here with EGT and acquired distressed assets, so Birka, Nigerian and Chiasma, and then secondly focused on revenue. So went really, really hard on trying to bring in revenue stage assets. FY 2022, it guided the market, it was going to do 265 million, and prior to that, it was acquired by Chiesi, the large Italian pharmaceutical group, for 1.48 billion. So, these are two really exceptional examples. I think if we can, make a fraction of the success with EGT over the next couple of years that Amaret did, and also hVivo, I think we'll be in a really, really strong position for everyone involved. So that's sort of the plan from an M&A perspective over the next couple of months and in the near term. So, as well as that, we have an existing range of assets, of exploration stage projects, and we're looking to sell or partner those projects in the near future. So I'll talk through some of these, particularly the Alstom Rare Earth project, which, rare earth is, as I said, really exciting space. It's a district scale rare earth system in southern Sweden that has a national interest designation from the Swedish government. We have the Pajala project, a copper graphite project in northern Sweden. We have a critical minerals project in Saxony. And then we also have an option over a carbon credit project in Ireland, which I've been talking to a few of you about already today downstairs, and we can talk about that in a bit more detail. I think prior to that, I just want to set the scene on where rare earths are. Obviously, everyone has seen, they've really been front and center of the news, and from a geopolitical perspective over the last sort of 6 or 9 months. And rare earths are a critical strategic asset, and it is a hugely exciting time to be involved in a business that has a really attractive rare earth project like our Alcerum one. Obviously, rare earth prices have hit a low a couple of years ago, but they've really improved over the last number of months, which makes interest in our project increase considerably. And also, it's been well documented, a number of the supply shortages to the US and to Europe, and again, this increases interest in our rare earth project. So I've just outlined a sort of snapshot of a few media highlights, and they outline a number of the key issues with the market for rare earths at the moment. The first one, sort of CNN up the top. I think the key takeaway here is 90% of all rare earth processing is dominated by China. That is a complete bottleneck, and we've seen, moving on to the second point, that China controls the market and can shut down European supply chains, US supply chains, you name it, in a matter of weeks. A number of the car makers recently were lobbying the EU really for access, and that includes sort of renewables companies and defense companies. Really interestingly, the US last month has finally decided to take action on this. They invested significant money into Mountain Pass Materials, who are the largest US rare earth producer. And this was followed a couple of days after by Apple, who agreed a $500 million offtake agreement with Mountain Pass Materials. So, I think the US have realized very quickly that they need to have access, a secure supply of access to rare earths in the US to sort of protect themselves down the line, and it's only a matter of time before Europe takes action to this, and that's really a key thing that Alcerum, our project, plans to capitalize on. So a bit more about Alcerum itself. It's located in southern Sweden, 100% owned by EGT. I mentioned it was a project of national interest by the Swedish government. It has a historic 43-101 compliant resource. The map there isn't looking great, but then sort of just above where it says Alcerum Resource, you'll see the red shading. I mentioned the plan has always been to move this asset on, to do a bit of work post IPO, and then partner when the market for rare earth projects got more attractive, and I think we're at that point now. Last year we did a 1,500 meter drill program across Alcerum West, which is just to the left of the resource, and then up the top left of the map there in Djupadal, and the key goal here was to show that there's a district scale rare earth system. We really wanted to show that this is a large rare earth area, really attractive for an incoming partner, and that it would ultimately increase the value of the project for ourselves. So all work has really been aimed at sort of packaging Alcerum up to sell it. A number of the results there listed. I won't go through them line by line, but the first one, 1.5 meters grading, 3.48% total rare earth oxide. So really, really positive results, and we're seeing a good bit of interest from it. Last year, as well as that, we did a good bit of metallurgical results. So I think a lot of people in the rare earth space will always talk about the complexity of processing. But fortunately, our rare earth phosphate can be recovered by standard processing, potentially at a third-party facility. So this is hugely attractive for an incoming acquirer. It means they don't need to develop a bespoke processing and refining infrastructure at Alcerum, which really reduces the ultimate development cost of the project, and obviously increases their returns down the line. All this work we did put us in a position to extend the key licenses for Alcerum to June 2029. So now we have these locked in for a 4-year period, and again, it's all about increasing the value of the project and making it more attractive to an incoming acquirer. So we're working hard. We're talking to a number of people on this, and look, we hope to update everyone as things progress over the coming months on doing a deal on Alstrom. I will quickly just run through the Pajala project. Again, the plan for this project is to monetize it through sale or partnership. It's based up in northern Sweden, confirmed copper and graphite zones. It's in a really well-established mining region in Sweden. It's very close to the Kunnasavarra iron ore mine, so there's a huge number of companies operating in that space, and a number that we're talking to about potentially taking it on. It is an IOCG copper target. There is significant copper mineralization across several holes, and this is a former Anglo-American project. They drilled 9 holes here, had some good copper intersections, ultimately let the license lapse, moved to Sakatti in Finland, just across the border. We still think there's significant value in the project. We've had discussions with a number of third parties on this. There's a number of junior miners who we think could be interested, and there's lots of news flow potential. So another attractive asset, and one ultimately we hope will help deliver some shareholder value. So second last slide, and then we'll move on to a few questions. But this is around the Alton peatland carbon credit program. So we took an option out on this last year. And we extended it earlier this year at no further cost to EGT. So we've kept this project as capital light as possible. And just as a bit of background to it, it's a 1,370 acre site in northwest of Donegal. So 1,500 or 1.5 million hectares of Ireland, predominantly the west coast, is covered in peatland. So 30% of that has been degraded. So degraded peatland ultimately leaks carbon into the atmosphere, and what we're looking to do is work with the appropriate parties to restore that peatland as properly functioning peatland naturally sequesters carbon, absorbing it through the plants and storing it in the ground. So peatland is considerably better sequester of carbon than forests, which a lot of people invest in. But finding peatland can be challenging. So really, what EGT's objective here is to develop a highly scalable peatland carbon and biodiversity credit project with near-term revenue potential. So I can update you on sort of where we are with that at the moment. We've been talking to a number of large local landowners, a couple of pretty significant, well-known landowners, national parks or large regions, and collaborating with them to really put together a highly scalable model for this. We're looking at a number of business models, but ultimately we will absolutely not be looking to acquire any land here, and we'll try to keep this as capital efficient as possible. Importantly, the Irish peatland standard was supposed to be established in 2024. It was delayed till 2025, and this will set the guidelines and the framework for actually developing these projects. We've been engaging with the standard quite regularly, and the goal here is to work with some of the other local landowners and try to access or try to put forward Alton as a pilot project within the Irish peatland standard. That can have a number of benefits. There's free funding opportunities. Typically with these peatland projects, there is a large upfront cost initially, and then hopefully once you start generating the credits, there can be sort of a multi-year benefit into perpetuity. So working with the Irish Peatland Code to set ourselves up as a pilot project where ultimately someone else would fund the capital upfront, and we'd be able to benefit from the downstream. And then there's also funding opportunities in Ireland from a number of the tech data center providers. A whole host of big tech are in Ireland, and for any of you aware of Ireland's issues with data centres, over 21% of the Irish grid is currently being consumed by data centres. So there's a number of data centres looking to invest in nature-based projects in Ireland that can offset their energy consumption. So last slide, just want to wrap everything together from our side and where we see the sort of near-term future. So significant opportunities to acquire, to restructure, and I think most importantly to transform distressed businesses in the UK, across Europe. We have an M&A strategy. It's going to target, revenue-generating businesses of a specific scale, and also distressed businesses, and then turn them around. We have an experienced team who've proven that they've done this before, have generated value for shareholders, and we're looking to do it again. From a cash position, we're in a very robust position, and we've no further committed spend on any of our mining projects as we're looking to move them on. And then the last point, so obviously aiming to sell or partner our existing portfolio of mining projects, and hopefully complete that over the in the coming months and generate a significant value for our shareholders. So that's everything. Anyone have any questions?
Don't say anything till I get to you with the mic.
Thank you. Thank you very much for that, Jack. So my favourite part of your story is the peatland story. You are saving the planet. And there's no reason why you should know the answer to this, but I'm wondering which other parts of the world has similar peatland opportunities, because once you've established this proof of concept in Ireland, you could roll it out across the globe.
Yeah, so actually there's quite a bit in Scotland at the moment. So Scotland, the Irish code is largely modelled on the Scottish one. So there's a number of large landowners who are already actively doing this. Quite a number of the companies that we've been talking to about actually doing potential work are based in Scotland. There's also been a number of projects, largely EU funded or EU supported projects in the Netherlands and Germany. So there is quite a few examples of best practice here, and we're trying to sort of take a lot of the learnings from that to put our project forward in the best way possible.
Two quick questions. First of all, can you define for me what is a degraded peatland? And second of all, how much has EGT invested in Old Sarum to date?
Yeah, so degraded peatland, now I'm no ecologist, but essentially it's the water table. So if the water table has been lowered, peatland becomes exposed, it becomes dried out, and in Ireland they would have used that for actually burning for fuel. So typically drains would have been put in to let the peatland burn out. So basically you're just reversing a lot of the work that has previously been done before. So that's on the Alton project. With Ulsterum, so last year our drill program, our plan was to spend about 10% of the funds raised at IPO. We were sort of met that mark, so we were probably somewhere around 500 to 600,000 pounds in bringing in doing the metallurgical work to prove that it could be developed in a third-party facility, and also to do the 1,500 meter drill program, which proved up that it was a district-scale rare earth system.
Any more questions? We've got a bit more time.
Obviously, there's only two of you in the team at the moment, and you're looking to take on, projects that are in a bad way, or that you're looking to grow. Have you found it particularly challenging with two people in your team to take on multiple of those projects at the same time? And how do you kind of plan to change your team to kind of grow in the future?
Good question. So from the M&A opportunities we see, typically you need to go in and actually work with these people. I think you can't throw everyone out day one. And typically in these businesses, there's a lot of good people doing a lot of good work. So, we're a small team, but that allows us to sort of fill in the gaps and plug the holes initially until we can, over a sort of 6, 12, 18-month period, transform the business and get the right people in. So, typically we look to work with the parties we're talking with.
And the businesses you're looking to go into, I guess, as far as revenue generating are concerned, would that include other consultancies, for instance, or water treatment companies, for instance?
Yeah. No, it would. Look, we're open to anything that we feel like we can get value for. We're not going to enter into sort of a beauty pageant sale process with private equity and other buyers. It's finding something in an opportunistic manner where we can make a smallish sum of money go a long way, but actually bring our skills, bring our expertise to the fore and help the business get back on the right track.
I've got just a quick one for you, Jack. I'm trying to figure out what advantage EGT would have in some of these distressed assets in the mining sector, in copper or rare earths and so on, compared to existing trade players who would be going for a trade acquisition, presumably with considerable experience, resources available to them already in that sector. Where do you think EGT has an advantage over them?
Yeah, so I suppose just to be absolutely clear, our plan is to sort of move away from anything in the copper space, anything in the natural resources or mining space. Typically, the really big companies, they're just too hard to compete with. They have the balance sheet strength to sort of withstand all of the various cycles and movements in prices and delays. So what we're looking at is typically your sort of SME-style business in the UK or Ireland or across Europe that isn't a development stage play. Isn't something that is working towards getting towards revenue. Isn't a proof of concept, or there's no development risk. We want sort of a mature-ish business that's at a stage whereby they found themselves cash strapped. They need their balance sheet to be recapitalized. They need critical investment to bring the business up to standard. So they're the types of sort of, I suppose, SME style businesses that we'd be looking at in and around ideally the sort of 10 million revenue zone.
Time for one more, if anybody's got a question for Jack. No? Okay. Well, thanks very much, Jack. Appreciate it.
Thanks.